Okay, so the crypto world is in an absolute free fall right now. And the question you're probably asking is why? Today, we're going to do a deep dive and uncover the hidden clues behind this massive Bitcoin crash. And let me tell you, this isn't just another market correction. It's a full-blown financial mystery, and we're about to solve it together. So $70,000, that's the number, the one that sent total shockwaves through the market. For the first time in over a year, Bitcoin crashed below that huge $70,000 mark. And you got to understand, this wasn't just a price point, it was a psychological fortress. The moment it was breached, a tidal wave of fear was just unleashed. But look, this is way more than just a dip. Analysts are calling it a perfect storm, a really rare and honestly devastating moment where four powerful forces all hit at the exact same time. So in this explainer, we're going to break down each one of those forces piece by piece to really get how we got here, and more importantly, figure out what could be coming next. All right, so let's start our investigation right at the scene of the crime, the market itself, because underneath all the glitter and the record highs, there was this incredibly fragile foundation that was just crumbling, and almost nobody saw it coming. So you might be wondering, why did it fall so fast, like straight off a cliff? Well, the answer is this fascinating technical thing called an air pocket. And the analogy here is just perfect. Think of the price chart like a skyscraper. When Bitcoin rocketed past 70 grand last year, it didn't really build any floors on the way up. No solid base of buyers, So when the selling started, there was nothing to stop the fall between 70,000 and 58,000. It was literally like stepping into an empty elevator shaft. And this is where things get really wild. You can see the market literally tearing itself apart in real time. The on-chain data shows this shocking split. The biggest players, the mega whales, they were the first to jump ship, selling off big time. But then you have the mid-tier institutions who saw a fire sale and started buying like crazy. And who was caught in the middle? The newest investors, the short-term holders. They just panicked and sold, many at a huge loss.
I mean, the sheer scale of the panic is just breathtaking. In one single brutal day, $184 billion just vanished from the crypto market. That's a number so big it would make even the most seasoned Wall Street pro break out in a cold sweat. And this slide, wow, it just perfectly captures the mood. The legendary Crypto Fear and Greed Index, think of it as the market's emotional heartbeat. It plunged straight into extreme fear. We haven't seen this level of pure terror in months. This confirms it wasn't strategic selling. It was a full-blown panic. But, a shaky market is only half the story. It explains how the crash happened so fast, but it doesn't explain why it happened in the first place. For that, we've got to read the trading floor and head over to the halls of power in Washington, D.C., where our second and maybe most important clue is waiting for us.
All right, let's get into our second clue, this huge piece of legislation called the Clarity Act. This was supposed to be the law that finally brought some rules to the wild west of crypto. But instead, it's become the center of a vicious political tug-of-war. So what was this Clarity Act supposed to do? Well, it was basically the rule book the industry was desperate for. The goals were pretty simple. First, end the turf war between the SEC and the CFTC over who regulates what. Second, protect people from another FTX-style meltdown. And third, create a clear legal path for new projects. This bill was the key to unlocking trillions in investment, and the fact that it failed is a huge part of this crisis. So what killed it? Why did this common sense bill just die? Well, it all comes down to this massive fight over stablecoins. On one side, you've got the powerful banking lobby arguing that the rewards crypto companies offer are unfair competition. And on the other side, you've got the crypto industry saying, hey, that revenue is our lifeblood. This one issue created a complete and total deadlock. And the result? It's a total legislative train wreck. The bill barely made it through one Senate committee on a purely partisan vote, which is basically the kiss of death. And in the more powerful banking committee, it's completely dead on arrival. The bill is trapped with no way out. Now, you'd think they could just compromise, right? Work something out. But the reason they can't is where this whole story takes a dark turn. We're moving out of policy debates and into the messy, personal, and scandalous world of politics. And that, my friends, brings us to clue number 3, because behind the scenes of this legislative fight, a political bombshell was ticking away, and it's poisoned any hope for a real compromise on crypto rules. It all revolves around this kind of shady DeFi project called World Liberty Financial. First, news broke that it had deep financial ties to the Trump family. Then, and this is what really raised alarms, a 49% stake got sold for $500 million to a firm run by the UAE's royal family. For Democrats, that was a huge red line, a major conflict of interest, and they basically started blocking any crypto bill that didn't address it. And this just created a complete stalemate, an unbreakable impasse. The White House drew a line in the sand. They would veto any bill that included ethics rules targeting the president's finances. So with Democrats refusing to pass a bill without those rules, and the White House refusing to sign one with them, the whole process just ground to a screeching halt. Okay, let's recap. We've got a fragile market, a stalled law, and a massive political scandal. So for our final clue, we need to zoom out and look at the ominous economic storm clouds that have been gathering on the horizon. And whoa, this is the chart that sent a chill down Wall Street's spine. The January jobs report wasn't just bad, it was a disaster. Economists were expecting around 48,000 new jobs. The economy only managed a measly 22,000. This was a blaring siren, a clear signal the U.S. economy is cooling down way faster than anyone thought, and it sent investors running for the exit from risky assets, like crypto.
And you know what's so fascinating here? This slide just completely shatters that whole Bitcoin as digital gold idea. In a moment of real economic fear, look where the money went. Investors stampeded into the classic safe haven, gold, pushing it up a huge 23%. At the same time, they treated Bitcoin like a risky tech stock and just dumped it, sending it crashing by 38%. The verdict is in. When the chips are down, the market does not see Bitcoin as a safe harbor. So there you have it, the whole picture. 4 clues. A fragile market, a deadlocked law, a political scandal, and a shaky economy. When you put all the pieces together, the crash doesn't just make sense, it was almost inevitable. The billion-dollar question now is, what happens next?
Okay, so the experts have basically mapped out 3 possible paths from here. The most likely, with a 55% chance, is what they call the base case. The political gridlock continues, and Bitcoin just kind of drifts down to its next support level, somewhere between 53 and 56,000. Then there's a 25% chance of a real bear case. A recession hits and Bitcoin breaks below 50,000. And finally, there's a 20% chance for a bullish surprise. The politicians somehow make a deal, and we see a fast recovery back above 70,000.
Which brings us to the final and maybe the most important question of all. This whole crisis really boils down to one huge paradox for the future of crypto. The very thing it needs most to survive in the long run, clear regulation, is also the source of its biggest pain right now. So will these rules be the anchor that sinks the whole ship, or will they be the lighthouse that finally guides it to the safe harbor of mass adoption? The answer won't just define the next decade for this industry. It's going to determine if it even has a future at all.